SMF Street Traders, we're going into the earnings on September 16th, year 2010, right in the middle of the options expiration. What we are going to take a look at is the analyst community back when SMF had given RIMM a sell rating and a short rating, and how wonderful it's paid off, because it has. And the thing about it is, here are some of the analysts of late that went to a buy. Their old target was 83, their new target is 70. Well, that's not right. The thing we like, people, now they reiterated a buy. Their old target was 75, their new target is 69. JP Morgan is out. They didn't give their figure. Oppenheimer reiterated and outperformed. The old target that they had in August was $69 to $58. Wedbush downgraded, outperformed to neutral, 65 to 57. Well, one of the things that we're going to take a look here is that RIMM is at $44 a share, just like we showed on the other videos. UBS reiterated in June 10th a neutral. They went from their old target to 70 to 65. And back RBC Capital, their top pick, their old target, they had to take it down from 120 to 190. And you can clearly see the pattern is that Robert W. Beard downgraded from 88 to 59. This is all in 2010. UBS iterated a neutral, 75 to 70. Well, the stock is at $44. SMF had given their price target of $35 and a sell rating when the stock, number one, when the stock was up at 150, it was time to sell. During the last two quarterly earnings report, we said that it was a sell, and that the majority of these upgrades and downgrades and these analysts are always wrong. They still got big high targets. I'm sure their client base is buried, and we're on the other side of that short trade. So I just wanted to give some of the highlights and some of the pros and the cons. And you can't count out research in motion for the simple fact that it has billions of dollars in reserves, has a boatload of mobile patents, and still the standard for corporate mobile middleware. The thing that we would like to emphasize is that the Android has given it quite a challenge and taken a lot out of RIMM. And these were things that stockmarketfunding.com was saying when we first heard that the Android was going to come out several months ago, that it would steal market share and RIMM would be a sell. The thing about it is they have a strong balance sheet. They have lots of technologies there. They've got a heavy balance sheet. These are all good, positive things. But remember, Android platform and the Apple iOS 4 products as well are actually competitively enough to challenge RIMM on its home turf, and it's done very well. That's why it's trading at $44 a share, we want people to know. People forget that RIMM put out BES Express, which is free at no cost. Personal liable using the BES Express is going to drive further growth, and a lot of users have their own BlackBerry and will now be able to connect to companies with zero expense to everyone. The other middleware platforms all have significant cost. Someone has to pick up, and someone has to pick up those costs, and there's going to show up in the profit margins per se. So basically, this is the upgrades and downgrades. We've given in the other videotapes SMF Street as to show you once again that the reality of this Wall Street analyst community is somewhat kind of wacky on their estimates. Now, if RIMM was to be bought out by Microsoft or another major player, is because they do have a lot of technology, but it's always been on a closed network, not an open source network. And the thing about it is, India was having a problem. I think there was some other, China was thinking about this closed network deal. So basically, it's a prime target as a buyout. The other thing is, with that heavy balance sheet that RIMM has, is RIMM could do a lot of stuff and try to make a comeback and get innovative again, but it's going to be a hard road. And basically, we're still going to keep our sell target on RIMM until we get down to that target of around $35. But remember, we were saying that when it was up at $75, $80. We did the monthly chart, we did the weekly charts, we did the options expiration for September. We've looked at up and out of the money volatility $50 calls, just in case one of the big ones like Microsoft or one of the other bigger players come after it. And there's been a lot of M&A activity of late. So even though that we're been short, we still have to have volatility, SMF Street. A March $50 call is what we're going to be looking at, just for that very reason. What we're going to do, SMF Street traders, even though that we're bearish on it, that's okay. We are always looking at how to protect our downside profits with an up and out of the money $50 call for March of 2011. And basically, one of the things that you're taught here is where the call was over here. Let me show you here. The call price was at, here we go, $11.10 on the high. So people have ridden this $50 call down all the way down here to the lows of 3 1/4. That means that gives the SMF Street trader, by waiting all of this out, it gives the SMF Street trader the entry at a very discounted wholesale price, just for all the reasons that we mentioned on the weekly, the monthly, we mentioned on the September 16th earnings, and any kind of speculative M&A rumors that get put out can cause RIMM to go higher. So what we look at is buying up and out of the money March $50 call. For that reason, if we wake up one morning and we hear just a rumor at all, they're going to gap it up and RIMM's going to run a lot higher. And RIMM is a very volatile stock. So in order to protect the downside profits people are making on the put side, is you got to come back and buy this deflated call. This dollar cost risk entry is, yeah. So if I'm making a lot of money already on the short side, or I'm short and I got money made, I'm able to buy this discounted price for that $50 call, M&A activity, March 2011. And that's exactly what we're going to be doing, SMF Street traders. And I'm going to give you these entry prices once I finish with the video. I'm concluding the video. RIMM 2011 $50 call, up and out of the money against a short position at a very discounted, deflated price from $11.10 down into the 343.50 handle. I will price it out for you off of the tape.